partner. Welcome to the Marketecture podcast. This is Harry Paparo. I'm here with Eric Franchi, and we're pretty excited to have a friend of the pod, Eric Seufert, on. So Eric runs Mobile Dev Memo. He's very outspoken and intellectual about everything involving the walled gardens, the hedge gardens, app install marketplace, and sort of algorithmic ads. And there's a lot of topics that have been coming up lately. It started out with like this whole thing about AppLovin's creating its own social network, which I found a little amusing. I was like, hey, let's get Eric's point of view. But then there's so much other stuff we needed to talk to him about, like this Manus tool from Facebook Meta that you probably aren't using today, but might be really important. And the SaaS-pocalypse and other things like that. So like Eric, like how do you keep on top of all this as an investor? Like I don't have anything on the line, but you're like putting money out there and everything's changing all the time.
Yeah, there's no substitute. You need to read a lot, follow smart people, and then, I mean, the way the job works is a lot of those smart people are founders. A lot of those smart people are raising money for their startups, and I happen to be part of, just in the middle of the workflow there. So I'm the beneficiary of being at the bleeding edge of some of this stuff that ultimately gets written up afterwards. But I'm so excited about Eric Seufert coming on this pod. I still think about that presentation he did at Marketecture Live too. Where he made everybody feel so dumb. He is just like, he just operates on a different plane, and I learned so much from listening to him.
Yeah, for those of you who weren't there, we invited him to do the keynote after lunch, and I gave him free reign. I was like, talk about whatever you want to talk about. And he brought out the calculus. Like, there were integrals on the screen, and like all of our brethren in their ad tech tuxedos were, taking notes. Taking pictures, trying to keep up. So that was very amusing. It was very interesting as well.
The Satisficer's regret was that yes. The term that
Satisficer's regret is the idea that if like a company like Meta is too good at optimizing stuff, that you as an advertiser think that you didn't get as good a deal as possible because they took too much margin. I think that's the explanation.
Yeah. Get your coffee. This is going to be a good one.
All right. So 2 weeks from now, we have Marketecture Live, which is pretty exciting. Last week, I was complaining that I had to do my deck. I did the first version. It kind of sucks. That's how it works. But maybe by next week, it'll be pretty good. So we hadn't announced who, we closed last two Marketecture Live with what we call the live Marketecture interview, where I interviewed, and the first one is Brian O'Kelly, and he, for the first time ever, talked about the pivot of Scope 3 to AI. So that was pretty newsworthy and really interesting. And then at the Marketecture Live in the fall, we had Terry Kawaja, who brought down the house. He just brought down the house talking about AI and the future in America. And he's going to be back on stage as well, but not with me, doing a really interesting presentation. So we had to have a good name to end the show. Day 2, end the show. Eric, you want to take any guesses who we got?
Give me a hint.
It's someone we've wanted to have on the show before and have not had.
Is it the big one?
It is the big one. It is the person in the news.
Green?
Jeff Green, the CEO of the Trade Desk, will be joining me finally on stage for an in-depth interview about all of the interesting topics. We're not going to talk about the stock price. I just am not interested in the stock price. We're talking about OpenPath. We're talking about Ventura. We're going to talk about what it's like running a public company that everyone cares about, whether transparency is the future. We're going to have a really interesting conversation. I'm very thankful that he agreed to join. It's the final session on day 2. In addition to this amazing agenda. I looked at the agenda yesterday and I was like, oh my God, how do we get all these people? This is crazy.
It's ridiculous. I know I say this every week, but you have the greatest cyclist of all time, Lance Armstrong.
Yeah.
You have Jeff Green. It's amazing. Well, listeners, we've been trying to get Jeff Green on since day 1 of this pod.
Day 1.
I think is like 3 years plus or minus. This is, holy cow. This is the end of the show. So Wednesday closing.
Yeah, so it's on Tuesday and Wednesday, March 10th and 11th. We start with my keynote. The day 1 ends with your startup showcase, more or less. We also have Joanna O'Connell, who's amazing, giving her a presentation at the end of day 1. Day 2 starts with Jeremiah Owang, who is an AI expert, talking about a lot of super interesting stuff. And then the day is just packed with interesting content. And then we more or less end with Lance Armstrong, no hold barred conversation. He actually gave instruction to our team. He does not want to see the questions in advance. So that's always fun. And then I finish off with Jeff Green, and it should be amazing. So I guess we should tell people you should buy tickets, right? You should buy, if you haven't bought tickets, you should buy tickets.
If you haven't bought your tickets yet, like, let this be your catalyst to buy the tickets. I mean, this, like, if you're a Marketecture listener, you've been just like hearing us, asking Jeff to come on like every few months. This is it.
Yeah. Also, I heard that the breakfast is being catered by Russ and Daughters, which is very exciting for a New Yorker. Russ and Daughters.
Familiar.
It's a 100-year-old bagel shop on the Lower East Side. It's known for its bagels and lox. Yeah. So we got some interesting New York food to round it out, which is always important.
Lower East Side.
Lower East Side. Yep. It's very famous.
Thus, I have no idea. I've never heard of it.
Yeah, I know. We'll have Staten Island pizza at the next Marketecture Live. All right, let's get into it with Eric Seufert, and we'll talk about all the exciting stuff going on in the world of apps, walled gardens, Facebook, etc. Friend of the pod, Eric Seufert. Thanks for coming.
Hey, thanks for having me. Well, it's good to be back.
There's just so much interesting stuff going on in the in-app world, the walled garden world, the AI world. I really wanted to have you on to just like give us the latest. And you also wrote this super interesting article about Apple's gatekeeping on AI data. That one seems pretty relevant. So I don't even know where to start. Let's start with SaaS-pocalypse. So we've all seen over the last couple of weeks this massive sort of fear gripping Wall Street, and the idea that AI can just replace software entirely, and that stocks have taken 50% cuts to their valuation. Elon Musk, I just found this morning before we were recording, because I knew someone was saying this. There's just generally this feeling like that apps might not exist. I mean, obviously you have games, but if you have ChatGPT or an agent, OpenClaw, and you just say, get me an Uber, you may not need the Uber app, in which case the app ecosystem may disappear. And Elon Musk just said this on Joe Rogan. He said, we're not going to have a phone in the traditional sense. There won't be an operating system or apps. It'll just be a device that's an edge node for AI inference. So what's your take on this, Eric?
Well, first of all, how are you? It's good to see you.
We're diving right in, man. People are busy. They need the content.
Have you got your coffee, Eric? I have. I've got a coffee. Yeah. So listen, I wrote about this 2 WWDCs ago because Apple introduced Apple Intelligence, or they announced it, right? And people were worried that I was going to kill apps because they introduced this idea of app intents, right? So you could sort of create a hook in your app, and you could just ask Siri, "Hey Siri, order me an Uber," right? And there's just a lot of incentive around wanting to own a surface area that users interface with. Like, if you allow yourself to get disintermediated from the user, you lose a lot, right? And that connects to my argument about independent agentic commerce being a mirage. But I also, but that applies kind of like to any consumer-facing surface area that you can imagine, including apps, right? And so one of the points I made in that piece is like, well, if everyone's just sort of running an API or an MCP, then they're commodities, right? Like, what's the real value that they bring to bear, and how do they get paid? And you've got to find the sort of commercial incentive here. And so if you just eliminate the surface area completely, you get rid of things like ads, right? Advertising just doesn't exist, or it takes on this totally new form of agents talking to each other, which again, I just don't think is supported by any sort of commercial impetus or commercial incentive. I just don't think it's going to happen. Agents advertising to, agents being advertised to is just not, I don't think it's ever going to be a format that exists. But you also you lose any sort of ability to communicate with the user, right? If you're always mediated by just the actual surface area, then you lose any relationship at all with the consumer. That was the core of my argument with the agentic commerce as a mirage piece, but it applies to anything here, right? And then you have to ask yourself, well, then what prevents the Edge inference node, which by the way, it doesn't make any sense. You're not going to be doing inference on the edge, most likely. Maybe you're talking about 50 years from now. But in our lifetimes,
Elon loves to throw out like technical bingo, like throw out some words he heard in a meeting and stitch it all together.
Right, but this actually connects to another topic that we want to talk about, which is the Apple gatekeeping the AI usage, because you can't do inference on the edge. You have to do inference at a server, and that's where they're inserting the gatekeeping. But we'll come to that. So then, what prevents the surface area from being disintermediated? Right, what prevents somebody else from coming over the closer to the user surface area that disintermediates the old surface area? Right, and so my sense is like you never truly get rid of apps. You still have to come up with the functionality that would hook into this app intent, and you're probably going to do so in a way that privileges your own app, right? So it might make sense to have Siri order you an Uber. You have to know about Uber. How do you know about Uber? You're going to have the dominant service. How do you know about it? If there's no sort of way to touch base with the consumer, well, then what? Are you advertising? Because you're going to have to get awareness in some way, right? And so I think like there's always going to be some way to undercut that sort of framework, and I think the reality is like any sort of specifically consumer facing company is gonna want to have their product in front of the user, and they're not going to want to be just dumb pipes.
Yeah, I agree with you. I definitely agree with you. Although, if consumers adopt a sort of a universal agent, some companies will have to. They won't have enough power. You know, you can imagine like if ChatGPT, OpenAI offered this kind of Uber app, and you could order an Uber. Uber might hold out, but then Lyft might say, "Hey, you know, order Lyft instead and participate." Right?
Sure, but Apple doesn't want that. Apple doesn't want that. Apple wants to have an app store. They make money from the app store. They're not going to allow ChatGPT to have an app store that undercuts them. They're not going to allow it. People have been trying to do that for years and years. No app stores in the app store. It doesn't exist. There's always going to be a commercial incentive to prevent that. There's always going to be someone else closer to the user in line from you, and it's going to be very difficult to leapfrog them. They're going to protect that position.
Okay, what about Apple? What about Apple offering, the ability to order an Uber from Siri? They already tried that.
That's what they're trying to do.
They're trying to do that.
They couldn't do it.
Right. So I guess a different related question. Why haven't super apps taken off in the West? Why are they popular in China and not anywhere else? Have you thought about the reason that might be the case?
Yeah, that's actually a really good question. So like, so in the kind of, the Asian context, you got these like OTT apps, right? And so they're bundled with kind of everything you use in your day-to-day life. It's payments, it's search, it's messaging, and it's all sort of social functionality. I don't know. It's just that maybe you'd have to bring a sociologist on. I don't know why. Maybe it's,
it does seem like a consumer habit thing. Like it does seem like it might be a psychological thing that Westerners kind of want to separate their concerns in some way. I don't know if that's true, but it feels that way for me as a consumer.
Well, I mean, it could be a function of just wanting to have, that semblance of individuality, right? I want to choose which payments service I use, or I want to choose which messaging service I use. I don't want to, I don't want to be one with the collective.
It may also be that it was so new, so many of these services, that the first company to offer, say, online payments was also the first company to offer a web portal and email and things like that.
But also Facebook's tried it, like Meta's tried it, it didn't work.
Eric Franchi, like, what's going on in the investment world with the SaaS-pocalypse? Is this affecting private valuations and concerns about things like this?
It's the closer you are to being a public company and having, kind of like public comps, absolutely, right? Because that's how these deals get valued. On the other side of the barbell, the early stage, AI native seed, not seeing it at all.
So let's go a little out of order on the topics we're going to cover and talk about this Apple AI thing. You wrote this piece. It was the first time I'd ever heard about it, that Apple has sort of a transparency framework for AI, and that it's starting to actually affect app approvals, and people are being declined for apps in the App Store for not giving sufficient privacy or disclosure. I'm not sure exactly. I haven't seen screenshots of it. Take us through this, because probably most of the audience hasn't heard anything about this either.
Yeah, so I mean, I called the piece AI tracking transparency. That was just me shoehorning this
Right.
idea into that sort of existing framework. But that's not what they're calling it. That was just a clickbaity headline. So essentially, what Apple did is in November they updated their developer guidelines, and they said that anytime you're sending personal data to a third-party AI service, you need to offer a just-in-time consent opt-in screen. And so, now if, a lot of apps connect to third-party AI APIs, right? And for any number of reasons, right? And so the issue here is, and this is like part of the privacy narrative with Apple. The issue here is that Apple has a very nebulous definition of personal data. They don't define it in a very concrete way, exhaustive way. And that's just very characteristic of Apple. They never define anything in an exhaustive way. They want to have maximum latitude to apply to selectively apply their developer guidelines. And so this happened in November, but nothing really came of it. I remember hearing about it in November and thinking, okay, this could be meaningful, but nothing came of it. And then all of a sudden, they started rejecting app updates for not showing the pop-up. And the thing about the pop-up is you have to actually disclose, and this isn't actually, and again, this is Apple being vague, but what Apple has said in the rejection notices, and you only find this on the Apple developer forums or Reddit, right, which is where I saw it, that they say in the rejection notice that you have to actually disclose which service you're sending the data to. Now you might say, okay, well, that's great for consumer privacy, and sure, maybe it is. That's a sort of judgment, but like the issue here is like, well, Apple has Apple Intelligence, right? They were going to have Gemini powering Siri, but who knows? Are we going to have to click on and consent opt-in for Siri, and every time we use it? Because presumably you have to click this opt-in consent every time this happens in an app. And so my sense is probably not. And then this is redolent of ATT, where Apple had a very specific ATT opt-in consent prompt for for apps, for any sort of like app developer, and then they had their own consent prompt for their own usage of that same data for ads targeting. Now they do targeting in a very specific way, in a way that probably is more kind of privacy preserving than how other people do it, but not universally so. And in any case, they access the same data, and they called what they did personalized advertising, and they made everyone else call that tracking.
And as a follow-up, so this is a system prompt that Apple has designed that you have some SDK, you have a API call that you have to make as an app developer, or do you?
No, you can customize it.
You customize it. Okay.
It's only redolent of ATT in that way.
Got it.
And that's actually an assumption. So we don't know. Maybe they do the same kind of consent prompt. But here's the issue. So my sense is they probably won't, because how are you going to do that with Siri, right? It's voice activated. My sense is what they're going to say is, well, we don't have to do that because it's first party. Because we host what they've said, and they said this in the Gemini announcement and the partnership announcement, and I covered this a couple of months ago when they actually sort of announced this partnership. But they're hosting this fine-tuned version of Gemini for serving Apple Intelligence on what they've called private cloud compute. So private cloud compute is this sort of like privacy framework that they revealed when they revealed Apple Intelligence, and what that is like air-gapped servers dedicated to doing this kind of processing that have a bunch of different, sort of privacy protections, but they're essentially run by Apple, right? So, well, that's first party. We're not sending it to a third party AI server, even though it's operated by Google Gemini. It's first party. We own the servers. These are air gap servers. There's specific protections put in place, and you can go read the white paper for why they can't be hacked. And so, well, that's also redolent of ATT, right? And so my sense is right now they're paying Gemini. Not that much in the context of Apple's earnings, but they're paying Gemini for use. $1 billion. But the thing is, they're not going to want to do that forever. I think they're going to want to make money on exposing AI models to iOS users and iPhone users, and they're going to want to make money probably in the same way that they make with search engines, right? So they take a revenue share. And so my sense is what they're going to do is say, okay, if you want to not show that, not have that pop up. Be sort of positioned between this third-party app developer client of yours, AI vendor, and your services for which they pay, then you're going to have to be hosted in some sort of partnership program on PCC. And if you're on PCC, then you don't have to show the pop-up because that's owned by us. But you got to pay us some share of the revenue that you're getting from these app developers.
Yeah, that makes total sense. It also makes sense that the Apple developer ecosystem would have AI calls in it for simple AI use cases, and especially with Apple in its current state not building foundational models, they could just rent seek on all the people who are creating foundational models.
Well, but they do have a foundational model. So they've got the foundational model framework, which hosts on the device, like I think it's 8 billion parameters. So it's small, but it's a multimodal LLM. And they also have the core LLM framework, core ML framework that allows you to sort of upload your own models with your app that are, sort of like, they'd be very small, right? But the problem is, and again, like the problem with Musk's idea that all the inference will happen on the edge, and the problem with the foundational model framework and even core ML framework is that the models that could run on your device are going to be very small by definition. So they're going to be like single purpose because you don't have enough memory. It's not necessarily the storage space. It's the memory to do inference on these models.
Right. Yeah. I was confusing frontier models and foundational models. So just a final question on this topic. Like, what are examples? I know personal data is not defined, but in these sort of rejections, have you gleaned what is being considered personal data? Is it any query because you don't know if the query is personal, or is it, name, email, etc.?
Well, it's any sort of like the canonical PII, but
okay,
so what they say is like freeform text could
be,
probably
right?
Not be, but it could be, and so they might say like, well, look, have you vetted it for that? And if you haven't, then you've got to flag it.
Super interesting.
I think what Apple's going to want to do is they're going to want to sort of put their thumb on the scale here in defining it to sort of probably force everyone to have to show the prompt.
Yeah, right. It makes sense that more and more things would be, and ad targeting could be, depending on the data that's being collected. You could have an SDK that violates this potentially by sending data for targeting.
Yeah, it could be. Well, that's already covered by ATT, right? So if you're using any sort of third-party ad service, even if it's not SDK-based, you're doing it server to server, you've got to show the ATT prompt. Essentially, everyone had to show the ATT prompt. That's what they say. Like, there's all these carve-outs. But the reality is, if you're running a business from your app, you're going to have to show the ATT prompt. And so it ended up being that the ATT prompt was shown to almost 100% of users.
There's a total side quest here, which is not really on the agenda of things we want to talk about. But, when I'm trolling on Reddit and on Twitter and other places like that, there seems to be this massive delay in all of the app stores because so many people are vibe coding and submitting apps. I've seen complaints everywhere from Shopify apps to X apps it's just like they can't keep up because there's so many folks in their basement submitting apps.
No, that's true. There was a chart that was going around Twitter, and it showed this massive inflection, or this like very sort of significant inflection of app submissions. With that coincided with some release probably of the Cloud Code CLI, but yeah, I mean it's true.
All right, I really want to talk about Manus. So Meta acquired this company called Manus, and it was like $2 billion, and it was business workflow tools. And I think the first take a lot of people had was it was an acqui-hire for just like the AI power tools, not necessarily a functional acquisition. That was at least what I thought. And now they've already kind of launched Manus for the Facebook ads platform as kind of an AI solution, and it appears they have quite a bit of ambition around this. So why don't you take us through this again? For a lot of our audience, they're not deep in Facebook Meta ads. So what's going on here?
Well, that wasn't my first take. So this happened right before New Year's, and I posted about it. I mean, I just tweeted about it, but I wrote that Wall Street Journal reports Meta paid $2 billion for Manus, and then I wrote, it seems likely that the Manus team could be deployed against Meta's Ads Manager tools or its Advantage Plus suite. This could also extend to Meta's newly announced Business AI and Meta AI Business Assistant. If the Manus team is primarily tasked with developing agentic capabilities for Meta's advertising tools, which makes sense given the company's core focus on agent development using third-party models, then it'd be a strong validation of the value inherent in continued campaign optimization automation. So that was kind of my sense. Like my sense was that that's why they were acquiring them. So Manus, just for some background, they didn't build models; they just built agents, right? They built agents. This is a core focus for Meta. I mean, just is strengthening these automation tools, right? And so, I mean, I think it's central to the company's thesis at this moment. So I think there's two really interesting ways this will be applied, right? One is how they did it, which was kind of just sort of consistent with what I thought that they were going to do, is just applying it to that the ads manager layer, which just helps people spin up ad campaigns, right? And that was already mostly automated with Advantage Plus, but there's knobs that they could automate the turning of, and that seems to be what they've done. I think the real value unlock here is applying this stuff onto the publisher properties. And so Meta announced this business AI at actually at Adweek, which I think is really interesting. It has been totally ignored, right? I had Meta's VP of North American business on the podcast to talk about this, but I haven't seen it covered anywhere. I think it's really meaningful though, but I think they're going to sort of like very slowly pursue the strategy, because I do think it's kind of like a fundamental change in the way that people think about like the relationship with Meta. But what business AI is, it allows a publisher either on the web or in their app to have like a chat bot that kind of picks takes the baton from the ad handover and walks the consumer through the purchasing journey. Right. And like, why is that meaningful? Because you can grab a lot of the ad information, specifically, I mean, particularly if you're going from the web, you can grab a lot of that from the UTM. And so you know exactly what they clicked on, you know, like a lot about the ad that brought them there. And then you can sort of, on that basis, you can personalize the journey for them. So you can sort of, you can assist with discovery. You can sort of walk them into the product that they just clicked on an ad for, or like variants of that. Right. But you know, there's a lot more power that you could bring to that. This is just like a sort of very early application of this idea. And my sense is, if you're going to get a lot of, you know, especially like e-com, D2C retailers who would say, look, am I better at personalizing my own sort of product journey than Meta? Probably not. Look how good they are at serving ads, right? And that, like, some people would reject that out of hand, but a lot of companies, the same ones that sort of like go all in on Meta ads, which is like a lot of D2C, they only buy on Meta ads. They'd be happy to turn that over to Meta, and they'd probably get a lot better results, right? So my sense is like this is a way to sort of extend that.
Yeah, this is like next gen LPO, right? It's like, first of all, in the era of AI, there's no excuse not to have landing pages for every single offer. Every single ad you run really should have a custom landing page. But if you throw in Meta's intelligence and AI into that makes a ton of sense. How does this contrast with what Google announced? So Google, at the beginning of the year when they announced UCP, one of the other things they announced was sort of Gemini on your website. But it felt a little more like a SaaS tool. It didn't feel as integrated as what you're describing.
Well, I mean, I think the early versions are very identical. I think what they described with they had a very kind of weird name for it.
Yeah, they did have a weird name. Yeah,
I don't remember
like
what it's called.
Gemini on your site or Gemini Enterprise or something. It was a really bad name.
It was very googly, but yeah, it sounds identical. But my sense is these things are going to evolve into like very seamless integrations, right? So where you wouldn't even really understand that you're communicating with like a chatbot, because I mean that's kind of clunky anyway. I think the chatbot's just kind of like the easiest way to manifest a lot of this stuff. But the reality is it's going to be seamless. It's going to be invisible.
Google's been sort of reticent to use its sort of rich consumer profiles for this kind of thing. You know, their search is very context-based, obviously, right? So, whereas Meta would seemingly not have much of a problem at all about using, you know, everything about you to improve the shopping.
No, I don't think Meta has much compunction about that. I think they, you know, because the reality is, I mean, like if you look at their kind of outward-facing comms, and I think this is true, by the way, but it is their sort of party line. We're here to serve the small business, right? And the small business could really benefit from having just a lot more personalization effort applied to not just the onboarding, but everything. Like, what if Meta was sending your follow-up emails? What if Meta was deciding your pricing? What if Meta was deciding your catalog management? What if Meta was managing the CRM for you on that basis? Like, so for all those things, there is a very large group of small businesses that would benefit from Meta running that aspect of their business for them.
Well, Eric Franchi, we also have a note in the news section about Claude just killed my startup. It feels like Meta just killed my startup. Like, how can independent ad tech, martech compete with these kind of things?
How much time do we have? No, just kidding. Yeah, I think I don't think independent ad tech, martech is necessarily focused on competing with or trying to beat Meta at all. Meta is probably unbeatable at Meta's game, which is focusing on the SMBs and using their unique data and using their footprint. It's just a matter of, can you capture share outside of it, right?
Right. I just wonder with like, well, I guess back to Eric S. So is there any indication that Manus will help Meta move into other competitive ad platforms? Could you use Manus to optimize your Pinterest spend or your Snap spend?
Oh, well, yeah, I mean, they're leaving it running, I guess, as a kind of independent entity. So maybe I don't think they would allow that. I mean, unless
Right.
they were just using that as a way to harvest data.
Yeah. I'm sure Snap wouldn't be thrilled with Manus logging into their account for them.
Yeah, exactly, exactly, and that's kind of the point, right? Like one of the things that I'm starting to get obsessed with is there is a class of company, and there's no acronym for this yet, that is, sitting on top of all of these layers of channels, right? So it's like social and search and CTV and display and so on and so forth, and providing like that layer on top of it in a Manus-like way. I think there's a real opportunity there.
Well, but just to answer your question though, you asked of Franchi, but I'll answer myself. I think you grow the pie. Like you're not going to, like, to Eric's point, you're not going to beat Meta at Meta's game, right? Meta owns social, and we'll talk about that in a second, I think. But like the CTV is pretty explosive right now. Like there's ways to grow this pie. I mean, there's like a lot of really interesting stuff happening with like digital out of home, right? I mean, like there's ways to actually attack those other surface areas that Meta's probably not interested in. I know there's a lot of, I mean, I think you said this already, that correct me if I'm wrong, but I believe you said this. You think Meta's going to expand into CTV? Maybe. I feel like they just don't see much of an opportunity there, right? I think it just doesn't matter to them from like a revenue potential standpoint, but like, why, these kind of the same kind of like meta approach could be applied to those other surface areas in really interesting ways that drive a lot of value. And I think that's where I'd be focused if I was running like a startup at this point.
Yeah, I think the Meta CTV thing is an interesting flyer. I mean, we saw Pinterest bought TV Scientific. TV is a big business, and Meta could probably do extremely well there, but I don't know how big it is compared to their other opportunities, which are enormous. So social network. So our friends over at AppLovin, some of you may recall, they made a bid to buy TikTok back, all of 6 months ago. Feels like years. That didn't work out. TikTok's now owned by a random assortment of people. And this week or last week, an interview in Chinese with a AppLovin exec talked about their desire or maybe plan to start a social network of their own, because why not start with ads and then add content and social connections on top of that, because it'll monetize well and they'll be able to drive some installs. So that's about as much as I know about this topic. What are you hearing, Eric?
Yeah, they had sort of publicly disclosed their intentions before that interview, which is why the person was allowed to say it. I think so. First of all, like they tried this to an extent. So they made a pretty substantial investment in a company called Flip, which was founded by an early AppLovin employee. I want to say he was a co-founder, but I think he joined the company when he was like 17 or something. So I don't know if he was an official co-founder, but he was very young and also early. And that didn't work out. The company shut down. But so they tried. It was like a social shopping experience. There's like a social e-com company, but there was like a strong social component to it. I think. Look, I mean, what does it take to launch a scaled social media platform? Well, just look how TikTok did it. They spent a lot of money. TikTok spent $1 billion in 2018 alone in U.S. user acquisition. They were the number one advertiser on Snapchat. They were number one advertiser on Facebook. So you could do it. And AppLovin is a cash generating machine. They generate an incredible amount of free cash flow. They have very little debt load. I mean, they could finance that, and they also have a scaled ad network that they could tap to drive installs. I think like that's kind of like a long term proposition, though. I don't know when that starts reaping rewards, and maybe it doesn't need to see any sort of like dramatic early adoption. It could just be like this sort of like continuously growing thing. But I mean, I think if you're AppLovin, I mean, I made the case a while back that AppLovin kind of represents a sort of new class of walled garden. They're not a walled garden in the sense that they own the inventory, but they essentially do, because they monetize it the best, because they have the best data, right? And because they have this totally integrated supply and demand side, right? So now they could truly become a walled garden, and that would also like enlarge the data footprint. And so my sense is like if you look at that from a strategic standpoint, it makes a lot of sense if they're willing to finance it, and I think they probably could, to the same tune that TikTok did in terms of growth. But like social media is really difficult. It's really ossified, right? Like a lot of companies have tried it. Like the last company that probably came close, although I will say this, I was in an Uber 2 days ago, and which is like worrying. The driver was on Clubhouse. I thought that was dead. Apparently some people are still using it, but the company that probably came closest to sort of being perceived to have the opportunity to break out was BeReal. And then that was sort of acquired in a fire sale by the French company Voodoo. So it's just really difficult because it requires a lot of money. Well, that's one thing that AppLovin has a lot of.
Yeah, a couple points here. So, a Clubhouse, for those who don't remember, was an audio-only social network that got popular for like a week during the pandemic. AppLovin sold its owned and operated properties recently, right? I can't remember exactly when. So it's a little strange that they had some owned and operated, and now they're going back into it. I also wonder, as a publicly traded company, if they start putting, $1 billion a year user acquisition onto their books, how people are going to react to that. Obviously, there's upside. If it was successful, their valuation would be an order of magnitude higher. But it seems it seems tough as a public company to take on a daunting, hugely expensive opportunity like this from scratch.
Well, but they did 1.8. No, they did. So they did 2.4 billion in free cash flow net of debt service in Q3.
Right.
In a quarter.
That's a lot.
Right. So, I mean, it's not like they don't have money. I mean, they've got plenty of money. And look, I mean, you have to sell this. I mean, look, the CEO of AppLovin is a very convincing guy, right? Yeah. And you sell this just like Zuck sold
sure,
the metaverse. I mean, he sold the metaverse. If you could sell that, a charming, person could sell anything.
Well, his stock suffered quite a bit on that one. Have you had Adam on your podcast?
No,
me neither. Adam, either one, Eric or mine. Come on, or both. We'll both do it. Okay, well, there's so many topics we could probably talk for another half hour. We're going to switch to the news section. We have a lot of news that's really relevant here, including a lot of funding, the Trade Desk earnings, Catalina acquisitions. There's a ton to talk about. So we will take a break and we'll come right back.
All right, everybody, and we are back with the refresh, the news of the week. Bunch of stuff to go through this week. Let's take a break from AI and apps and talk about consumer data. So Infillion, for those not familiar with Infillion, it is a kind of like a scaled private ad tech company that has acquired assets along the way, most notably MediaMath out of bankruptcy. They made a big acquisition this week. So Infillion acquired Catalina. So Catalina, if you are not familiar, it's like deterministic purchase intelligence data. They're in 70 retail locations. They track 130 million households, 600 billion annual spending, like literally at the cash register. So it's a really interesting asset with purchase data. Why is this interesting for Infillion? I'll start, and I'd love to hear you guys pile on. So it's, thing one, for any DSP or programmatic company, having unique inventory or having unique data is becoming increasingly important. This is unique data. At least at this point, it's going to be kind of widely available. But I would assume at some point it becomes specific and exclusive to Infillion. And then number two, this is in the release. Infillion has a ambition to kind of become a power of RMNs, basically kind of build your RMN on Infillion. This is unique data that they can use to infuse that type of offering. So it's cool from two standpoints, right? The unique data angle and, kind of empowering the next gen of RMNs.
Yeah, I have some experience with Catalina. I when I worked at Nielsen a long time ago, they had a joint venture called Nielsen Catalina, and Catalina was known at the time for having loyalty card data. So they had quite a bit. It's opt-in, but it's a very substantial amount of shoppers in various retailers, and they get SKU level data, and then they link that back to profiles. It's a really valuable data set. For me, the interesting thing here is, how did Infillion win this deal? Because you could make the argument of Catalina's synergy with a lot of other companies, some of which have very deep pockets. The Trade Desk, the Trade Desk will get to their earnings, but it was soft on CPG. You can Yahoo with its DSP has some data, but a little bit of a deficit. There's so many other companies that could have bid on this, and I'd love to know the TikTok on that. What?
Guess what? We're gonna have an answer for you. Because Rob Emmerich, the exec chair of Infillion, who's the guy behind all these deals, he's coming on the pod in a few weeks.
I guess I knew that, right? I should have known that.
You need your coffee. I was waiting for the punchline to come.
Yeah.
Hey,
Yeah, exactly.
Yeah, so we'll have Rob on. I think it's a super interesting deal, and increasingly a kind of neat company. Eric, what's your take on this one?
Can I ask with the Nielsen JV what was like I mean I can kind of conceive of ways to use that data, but like could you walk us through like a one example of a use case where that was used by like a marketing company?
Yeah, so Nielsen has a different shopper panel that is opt-in, where users actually scan their receipts, and they've had that since like the 1980s. And so the idea was you take Nielsen's data and Catalina's data, put it all together, and then it was like step 3 profits was more or less it. The primary business was selling back to CPG companies about market share and, volume and things like that. But they wanted to use it for consumer profiling and targeting and television advertising and all that other stuff pretty ambitiously. And my understanding is that it didn't go that well, actually, that this was probably early in the days of big data when it wasn't, things like lookalike modeling weren't as common. And they had some scale issues because like, even if you have, let's say Catalina has $30 million households in the US and Nielsen has
130.
It didn't at that time, but yeah. Gotcha, like the overlap wasn't that great. And I don't think it was very successful. I think they unwound that deal. So now Catalina was sort of an orphan at some point, and that's how this ended up happening. That's a very short version.
There's a lot of interesting research being undertaken right now about in like the topic of like digital twins, but a lot of that is being directed at like the marketing use case, right? So it's like I could see that data being used to construct like purchase proclivity adjacencies for like some specific profile, right? So it's like, okay, like look at all this data, and then if I'm a user who's bought this thing, like what else should I have advertised to me based on like historical purchase patterns? That seems like a really interesting application of that data set.
Yeah, there's that. What's the name of the other company that does the receipts for supermarkets where they use that data? So if you buy Coke, on the receipt it says buy Pringles. I can't remember the name of it. I think they were also a Nielsen partner. I'm just kind of totally blanking on the name. Anyway, well, readers, hit us on social and tell us the name because it's a very well-known company. All right.
All right, let's move on. You want to talk about TTD?
I think we have to.
Sure. So TTD had earnings yesterday. The company reported a good quarter. Sales were up 14.3% year on year to $846.8 million. On the other hand, next quarter's revenue guidance of $678 million was below analyst estimates. The stock went down. I feel like talking about the stock, like just
I hate talking about the stock. I hate talking about the stock.
Yeah, kind of gets us nowhere. You mentioned you dug into the transcript a little bit. What did you get out of it outside of the softness on CPG?
Well, I didn't dig into the transcript, but I kind of various people sent me stuff. This is much easier than doing my own work. The thing that there's two stories that people or 3 stories, I guess. One is take rate increased. So the take rate, meaning gross bookings divided by their revenue, had been in the 20s and now it's in the 21s. And my reaction to that is, well, any dollar that now goes through OpenPath should increase take rate, because in the old world, you're paying 10, 15% to an SSP. In the OpenPath world, you're paying 5 or 10% to the trade desk. So you expect take rates to go up, even though it looks bad and people love to hate on that. That is explicitly the strategy of OpenPath. And the promise to customers is that it should cost less in total. Right, because you're consolidating margin. But people definitely, I had some DMs about, hey, do you see that take rate? I'm concerned about that. And it also, unfortunately for the PR department, the trade desk kind of feeds into the other conversation going on about OpenPath and hidden fees and transparency, where it was announced that like Dentsu and WPP, I think Adweek said, quote, quietly exited OpenPath, unquote, for transparency reasons. So there's a lot of talk and pressure against the narrative that Trade Desk is trying to push, which is transparency and a complete ecosystem.
Got it. Okay, so take rate going up was number one. You said there was another thing.
There was another. The other thing was the open path kind of thing, and then the third thing was this strange announcement about Ventura. I don't know if we want to cover that. The television operating system. The company put out an announcement about what they called the Ventura ecosystem, which I interpreted to be a bit of a reversal or retreat on the idea of selling a complete operating system. And it seems like they're more pitching to OSs to use their SDK and use the sort of a layer of advertising instead of a complete OS switch, which obviously is a lot easier.
Yeah, and just get access to demand. So it seems pretty straightforward and plays into their strengths. Back up on the quietly exiting OpenPath. So there was an article in Advertising Week or Ad Week specifically naming Dentsu and WPP. With revenue going up and take rate going up, I wonder how much impact that's had on Q4, or if this was a Q1 thing and we might actually see some of the impact in Q1.
Yeah, I mean, it's a good question about if OpenPath is accretive on take rate and on margin, then you lose share in OpenPath and you lose margin, right? It makes sense. I put a tweet that got a lot of reaction about this, which was that I think we should be skeptical about this take from Adweek's headline, which is that they left because of hidden fees and transparency. I pointed out that it's very possible that Dentsu and WPP have preferential financial arrangements with various SSPs, sometimes called supply path optimization agreements, and they may be getting rebates or kickbacks on the amount they spend on SSPs, in which case they wouldn't like OpenPath because they would not get those kickbacks, and then they might spin that as a transparency concern. But then, Adam Heimlich pointed out that that there is a lack of transparency. He mentioned that they don't specifically give guidance on OpenPath in the raw log files they provide, which is interesting. And, him as a partner of theirs would probably have a lot of knowledge about that.
Yeah, that makes sense. And I think, kind of transparency and rebate aside, the other thing that might be happening here is just this shift towards sell-side decisioning and some of these unique products. Speaking of Adam Heimlich, Chalice has that interesting integration and partnership with Index that made the news because Dentsu was using that to power some of their buying. So it could be a bunch of seismic shifts happening.
Yeah, if you're using a curated deal ID, then you're not using OpenPath by definition, right?
Can I ask two questions? This is not a company I follow super closely, certainly not quarter to quarter. But what did you make of the? So first of all, the stock being down is not really indicative of anything. I mean, Nvidia just annihilated earnings last night, and their stock's down 5% today. But it's just this is a moment where everyone is scared, and they don't really know how to interpret good news. Although the trade desk earnings were kind of weak, or the guidance was weak. But what do you make of the executive turnover? That feels like that was maybe not a positive signal. I mean, there's been quite a bit of that recently, right?
Yeah. The two different CFOs in the last 6 months have left. It's definitely something people are concerned about, as just this general feeling like they're not putting their best foot forward into the PR world, both for the Wall Street, investor relations, and the industry as a large, which is why, I'm so excited to have Jeff Green on stage at Marketecture Live, where I'm going to have to ask him, what's going on? How are we, what is happening here? Hopefully I'll get some good answers out of that.
Can I ask one more question? Do you think so Jeff Green called out in the earnings call that, Amazon's not that serious of a competitive threat and Google was far greater of a competitive threat. Is that comm strategy working? I just feel like maybe people don't believe it.
People do not believe it. And a lot of analysts have been harping on that. I think it's probably true-ish, in that I think the trade desk is really focused on the sort of middle to upper funnel marketers, the TV budgets, what you might call the traditional 500 global advertisers. I think that's just the vast majority of their revenue. And the Amazon's coming at it from the other direction, from the smallest guys upwards. And Amazon, other than Fire TV, is probably not as strong in CTV. So I could see the argument that they're not losing head to head against Amazon as much. I think it's also interesting I've always liked to look at market share in the DSP market, like, by gross spend. Where is the money going? And it used to be that it was DV360, and then a long way back was Trade Desk, and then Amazon was like zero. And now, from my first of all, the Trade Desk gave a number. I think they said 13 billion in media spend in the last 12 months. I think that's right around where the other two guys are. I think it's like a three-way tie at this point for market share, more or less, with some rounding. They're all in the 10 to 13 range, let's say. Maybe updated DV360 data maybe is different because of YouTube, but it's around the same. And then you have this giant gap to number 4, which is probably Yahoo DSP at $1 billion or $2 billion. So it's a horse race.
No, just to talk about the Amazon point, that was a few quarters ago where Jeff said that, and then, the analyst community jumped all over it. And then subsequently, where the criticism has continued is Amazon just going after market share via lowering their take rate, right? So to your point, all right, if they started at 0, I don't know when they were at 0, and then now they're at parity, taking that amount of market share means that it's a competitor.
Yeah, it is. I think, though, if I would guess that Amazon's taking a lot of share from other parties, like retargeting companies and small retail media companies, and they're just marching through like the Huns coming over the Urals. It's definitely something that Wall Street's very concerned about, certainly.
But he did say it. He said it this quarter too. I mean, he said, I would say, let me explain why people want to talk about Amazon a lot as it relates to competition. I've said before, I think Google is a far better competitor than Amazon is today, which is kind of like saying, the sort of like the heyday of the competitors to us is over.
Right.
All right, let's move on and look forward to seeing him on stage with you. My goodness. Talking about AI. So 2 interesting fundraising announcements this week. So the first was Profound, which is a geo AEO company, is now a unicorn. There is 96 million Series C at $1 billion valuation for AO Geo. This is pretty impressive.
Yeah, it is. Considering I've barely heard of this company.
We've talked about Profound like 20 times. What are you talking about?
I think all the Geo AIO companies run together. The one thing I will say is that last week we had Nate Elliott on, and he talks to marketing folks and AI folks all the time. And the one thing I really stuck with me from that conversation was he said every CMO is obsessed with this subject. How do their brands appear in AI? And that's a buy signal if there's ever been one.
Yeah, it absolutely is. We'll link to the post. Basically, the post was just an X thread by the founders, but they say that 10% of the Fortune 500 are using the platform. They're rolling out agents to be able to basically take some of the insights from the answer engine, turn it into usable content, and do so automatically. So it's pretty impressive. It's also like a really, really hot category. I mean, like, I'm continuing to see deal flow for this category. We're continuing to see fundraising for this category. It's super important. And then just the question is, is there going to be one winner or a few?
Is there a switching cost is really my question. Like, if I sign up with Profound for a year, I get my insights, and then the next year I'm like, oh, Bluefish looks pretty good. It feels like there's no switching costs except maybe historical data. Also, all these companies have switched. They're not optimizing anything anymore. They're basically analyzing. They're analytics insights companies.
And then now action, right? So actually taking these insights, turning them into content, having that content, better fuel the answers that people get. A little bit of a closed loop. Is this a category you're paying a lot of attention to, Eric?
No. I just wonder what happens. So if you want to appear in chatbot results, ChatGPT has good news for you. You can buy ads from them. I wonder how that kind of undermines the efficacy of these kind of approaches. But no, I agree. Like I know that it is a massive initiative for like a lot of scaled companies. They want to appear there. My sense is though, like the chatbots themselves have incentive to get you to pay for that.
Yeah. Yeah. I also, I really wonder about this category. It feels as though like there's so much uncertainty that the CMOs just need a friend. They need a corporate friend to be like, we're going to handle your AI stuff. And we don't know exactly what that is. It's changing every day. We'll just keep building shit for you. We'll become the HubSpot or the Salesforce for AI. And don't worry too much about what category it is or what budget it is. You need a enterprise vendor to be side by side with you.
Why are you questioning? That sounds like a pretty damn good business to be in.
Yeah, no, I think that's what it is. I think the actual features aren't as important as that they have like, oh, we raised at $1 billion valuation. We have the enterprise salespeople you used to work with at company X. It's yeah.
Yeah, get it. Okay, there's this other one, Koa. Koa is being called the AdSense for AI. I don't know if they're calling themselves that. Or somebody's calling them that. That's pretty big.
Their investor called them that in his blog post.
Yeah, so they raised they raised a $20 million Series A by Theory Ventures. So what do? They help chatbots and I guess long tail LLMs monetize via ads, right? So what the picture that Eric painted for ChatGPT, like, can you build a network and can you build a business to power this? The thing that I'm trying to understand is what is the real opportunity in the long tail of LLMs, the long tail of chatbots? I think it's interesting in that there's vertical ones being kind of coming to market. I think there's like a lot of utility in these maybe niche and vertical LLMs. But I just remember this anecdote that I heard from the Open Ads guys. So Stephen and Michael, most folks are familiar. They're like awesome, brilliant, and super prolific. This was their original idea, and they very like publicly and visibly pivoted because their sense, and this could be a timing thing, is that some of the vertical and niche LLMs are not good for advertisers. They're like AI girlfriends. They're like weird kind of niche chats. And it's not necessarily a category that is at one scalable or at two kind of advertising friendly. But this thing is moving fast and maybe now the market's ready for it. I don't know. Do you have a sense?
I'm chomping at the bit to get in on this one. So I already wrote, I was so worked up. I already wrote a full newsletter coming out on Monday about this subject. So you could hear my thoughts there. This is a terrible business plan. Like, it's a terrible business plan, right? Because basically it only works if there's a fragmented long tail of AI agents. And most of the fragmented long tail of AI agents have no context. Like, AI girlfriend is not a context where AI ads make sense. AppLovin will be able to monetize your AI girlfriend better than any AI company could. And then if you're like in the vertical space, monetize your AI girlfriend. That sounds really bad. But then if you're in the vertical space, if there's some emerging leader that's like AI for travel or AI for shopping, they're going to run their own ad platform. That's what happened in apps like Pinterest, Snap. They all have their own ad systems. As soon as you get scale, you want your own ad systems. And if there really was an opportunity for this long tail of AI companies, then the critical mass and scale on the demand side would be the winner, and that would be Google or OpenAI, right? There's no way to square this to make this a big business. With that said, I could almost guarantee they're going to make their money back on this investment because someone will buy them just, for a couple $100 million in a couple of years, or maybe even $1 billion. I'm not going to suggest that Koa itself will not be successful. It's just a bad business plan.
Yeah. Eric, what you got?
I'm going to drop everything I'm doing and build the company that monetizes AI girlfriends. That's a brilliant business proposition.
Turn your AI girlfriend on the street, earn a little extra dollars. Go trick.ai or something like that. I think we might have to cut that.
Producer Mike. Anyway, let's move on. Let's move on to a family store, Walmart. Bring it back to the content that is appropriate for the audience. So Walmart's ads business is ripping. So Walmart Connect grew 41% in the U.S. As reported in Q4 earnings. I figures up from 33% in Q3. So this thing is going. I mean, it's still a ways to go versus Amazon. I think it's like a $6 billion business versus a $60 billion business, but they're moving in the right direction. I'm super impressed. And obviously Vizio's, a real tailwind for this.
Yeah, 41%. That's a really impressive number.
It's outpacing the market.
Someone asked me this question the other day, and I really don't have a great answer, which is how much of retail media is growing the pie versus share shift? Share shift meaning like, you have coupons and Sunday circulars and end caps in the store and all that stuff. Moving all that to digital, is great and it's good for the retailers. But are we growing the pie? Is like the entire advertising market for these products going up and taking away from, let's say, TV or more products being sold? And I have sort of a hard time answering that question.
I mean, I think you think in theory that it should be, because these are just much more efficient ways to serve ads to people, right? I mean, they should perform better, they should produce more results and more sort of like economic output. So you'd assume that should, you just have this analog ad, but yeah, I mean that's always been the argument for RMNs is like, well, that's taking like events budget and that's taking like in-store budget and that's just shifting it to digital. It's not really growing the budget. But my sense would be that I think in Walmart's case, it must be, some of that must just be compounding, right? Because like, well, I was spending this money on in-store discovery before, but now I'm getting like 30% better outcomes or 30% more revenue that's like attributable through, some model that I have, assuming I have a model that, and so I'm reinvesting that. And my sense would be like some of that growth is just a function of like digital is a much more efficient path to sort of driving commerce than these analog approaches.
Exactly. And at the rate that it's growing faster than either other segments of digital. So like one of the theories that I have is that it's pulling budget from just like standard display, where it's less accountable, less, less efficient, less performant, because it's just growing at an outsized pace. And I think that's validated with like all of the momentum around like offsite retail media. It's just becoming a better segment of programmatic from a performance standpoint.
It's pretty hard to tease it back because the consumers are shopping more online. So there's consumer behavior that's switching as well. And some of these dollars would have been spent in different trade budget ways. So it's a little tricky, but I think Walmart, given their scale and also their Vizio acquisition, has the pole position here. I mean, secondary to Amazon to really grow the pie.
Absolutely. Want to call it there?
Yeah, let's call it there. This was an amazing conversation. I definitely, Eric, whenever you're on, I learn a lot. This was particularly interesting. A lot of topics that are very relevant and cutting edge. So where can we find you? Where should our listeners find you? They should subscribe to your newsletter?
Yeah, so I just something that I'm kind of focused on right now is this podcast series that I'm working on called The Prosperous Society, right? So I wanted to sort of put forth a counter argument to all the AI doom and gloom. And I've been working on this long form podcast for a couple months. It was up to 5 hours of runtime, and I decided, as a result of the Citrini blog post, that I was going to cut it up into episodes. I released the first episode this week, and it's done really well, and the response is has been really positive, and I'm really excited to continue releasing episodes in this series. I think it's going to be like six episodes, but I'm just sort of like making the case for why the application of AI to the digital economy is going to be a boon for consumers and boon for society at large. That's kind of what I'm focused on right now. That's just a free podcast. You can find that on Mobile
What's
Dev
it called
Memo.
again? What's it called?
Well, the series is called The Prosperous Society, but it's just under the Mobile Dev Memo podcast umbrella.
Okay, Mobile Dev Memo.
So if you search for Mobile Dev Memo on Spotify or wherever you consume podcast content, you'll find it. But other than that, you can always find me on X. You can find probably too much of me on X, and mobiledevmemo.com.
All right. Well, this was a great conversation. We'll be back next week.